Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, February 18th. Firstly to the Euro US dollar, and here we see another small body candle today. Very uninteresting trading going on at the moment here. For the past 4 trading days, fairly small bodies, 3 of them black, one a little bit larger, which was the white body. There was a suggestion that the buyers may have been attempting to build some momentum for that day's trading, but we haven't seen any strong follow through today. Importantly, for the second day, we've seen the sellers lose commitment down below the Candlestick indicator. That trades at 113.59 at the moment. It is a very important area moving forward for today's candle. We'll be watching that closely to either hold a support or be broken. Buyers continuing with control, very weak control for the previous day's trading, but closing up closer to the high today, suggesting a possibility of the market moving higher, but very strong resistance just above where we're trading at the moment, around 114.59, with the Kijun-sen trading around there. So the market caught within this limbo area between the Kijun-sen and the Tenkan-sen. So just a slightly bullish market in the short-term time frame, only slightly bullish. Just slightly bearish in the medium-term time frame, so this mixture of trends, but more importantly is this congestion area that the market's been forming over the last few weeks, and it's forming something of a symmetrical triangle, not quite a perfect one, but the important thing is the congestion and the barriers that we've drawn with the convergence of the peaks and troughs within the congestion area, and there is a possibility of a breakout in either direction. Symmetrical triangles can be either reversal or continuation patterns, but within line with that previous strong downtrend, and with the market being trading down below the Ichimoku cloud, it's more likely that the next move would be to the downside. Now obviously we require confirmation, so a close down below the bottom barrier, which would then also give us a close down below the Tenkan-sen, would finalize and complete that pattern, and then we'd be able to draw a target which would be down below the 111.60 area of support down below. Now the realistic capacity of the market to reach any target below there may not come to fruition because of the strong previous support around 111.60 and just below that at the swing low where we saw this appreciation from. Just looking at the bands here with the Euro US dollar, and we see a tightening of the bands going on. So this is what we call the squeeze, and it's the warning signal, get ready for trending action. And the market has begun to transition away from this downtrending phase, and good potential for a new uptrending phase to begin. The transition involves the previous downtrend, the market then trading within the bands, finding resistance around the middle of the bands, then support, and then trading within the bands with the bands squeezing together. So a very good likelihood of the market breaking out to the upside. Now what we want to see, and we don't know whether it will be to the upside, it could be to the downside, so we'll be watching that lower band very carefully as well, and a breakout to the downside would be in line with that pattern that's forming, and the market moving in line with the bearishness in that longer term time frame by trading below the Ichimoku cloud. The upper band trades at 114.18. What we'd like to see is a bullish breakout and hopefully clearing this area around these swing highs around the 114.50 area. So a strong bullish breakout and then strong bullish follow through to confirm. Now we could have a strong bearish breakout and then strong bearish follow through, but we'd really want to see the market clear the swing low around this candle. Moving next to the US dollar Japanese yen, and continued sideways action within this large area between roughly 121 and 116, and for today's market, the market has found resistance at the 119.20 area, once again being rejected from there, finding support roughly around the Tenkan-sen indicator, previously breaking out up through the Ichimoku cloud, a lack of follow through, the sellers coming back into the market, and we'll be looking to strong support coming in around the top of the Ichimoku cloud, 118.27, and then at the Kijun-sen indicator just below there at 118.50. 115. Over the next few days we have a very thin cloud, and there is an opportunity here for the sellers if they're strong enough to trade down through there and change the market into a negative one in the longer term time frame. But really a lot would depend on the market then eventually clearing the support down around 115.76, or if we do see the market trading to the upside, we'd want to see the market clear above this 121 region. So a market that's not terribly interesting at the moment. Moving next to the Aussie dollar, US dollar, and we see a continuation of the trend to the upside on this candle that has finished trading, closing for the second day up above the previous important resistance at 78 cents. Previously we see the large shadows on the top of these candles as the market attempted to trade up through there in the recent past and being rejected in a moderate way from there and finding support down below the 76-72 region. For the candle prior to today, we've seen the market bouncing off the Tenkan-sen support for the third consecutive day. Bullish close up above the 78 cent level, buyers in control. And today, not strong follow through. The body of the candle is reduced drastically, almost a doji type candle, but the buyers have still managed to just close with control and importantly closing above 78 cents. So what we want to see is follow through, and the range of this zone of resistance does extend up through the high of today and up to around the highs of these candles about 78.50, and then up through to this swing high about 78.75. So the buyers are going to have to be very strong to breach up through this resistance area, and it just doesn't look like they're going to be able to do it for on the basis of today's candle. By the same token, however, the strong support down below 78 may continue to hold, as may the strong support at the Tenkan-sen indicator at 77.41. And moving next to the bands with the Aussie dollar, US dollar, and here we see the tightening going on. Previous squeeze, bearish breakout, bearish follow through, downtrending action, the market then trading within the bands, finding support at the lower band, squeeze going on, looking for a breakout in either direction with confirmation. So at the moment an uninteresting market, but potential for strong trending price activity after we see that breakout.